in this review, you will find out about some interesting news and relevant forecasts. Besides, we have received data on US crude oil inventories and are ready to share it with you. Watch the video till the end so as not to miss anything important. So let's kick off our review with the news that US crude oil stocks fell less than expected in the latest week. This in turn caused the global oil market to tank. The trading chart shows that oil has been trading downwards for 2 days and it has already crossed the boundaries of the sideways channel. According to analysts, this is the way the market is preparing for the Fed's monetary policy tightening. The new plan for interest rate hikes next year is expected to be more radical. If this assumption is correct, the current oil quotes are too high. This may lead to an even more significant drop in oil prices. However, this scenario is likely only in case of a strong interest rate rise. There is no outcome of the Fed meeting yet. Therefore, let's return to the actual price movement and its short-term forecast. On Tuesday, Brent crude oil futures fell to $73.15 per barrel. If the price fixes below $73, the benchmark will most likely extend losses, sliding to $70 per barrel. Likewise, the ruble suffered losses on Tuesday. US producer prices increased more than expected. As a result, the Russian currency, along with the rest, gave in to the greenback and lost a few points. If the Fed decides on more decisive steps to tighten monetary policy, the ruble will extend weakness. However, definitely not today. By the time the outcome of the Fed meeting becomes known, the Russian market will be closed. Therefore, the pair is expected to gain upside momentum on Thursday morning. Until then, the Russian currency is likely to enjoy a relative stability. For now, the dollar-ruble pair is trading near the level of 73.70. Speaking of gold, the precious metal followed the oil market lead on Tuesday. Gold prices edged lower as investors weighed concerns over monetary policy tightening. Given that the speculative component in the value of gold is higher than that of oil, the asset is likely to continue losing ground. Moreover, unlike oil, gold is not a vital resource. Therefore, its outlook is extremely disappointing. If the Fed speeds up monetary policy tightening, gold risks collapsing. In the meantime, its forecast remains unchanged. Gold has been trading within a channel between the levels of $1,769 and $1,793 per troy ounce for the second week in a row. In the near future, the precious metal may rise to $1,780 within its range, but then it will most likely go down. And well, that's it. Today, the future of the US monetary policy will become known. Whatever it may be, market volatility will definitely increase. Follow the news, stay tuned and build your own trading strategy, and we really hope that it will bring you profit. Thank you for watching and see you soon.